of 20% IRR, 20% dollar-based internal rate of return for power project based on coal, provided you are able to do the financial close by 2015. So it is for the early birds, you know. So I am hopeful the work that has been done by the sponsors of this first project, they are working very closely with some of the largest Chinese companies, and you will see, inshallah, that very soon this will come on ground. Thank you.
Thank you. And I think as was shared by some of my fellow speakers, you know, in order to be realistic, we have to be prepared for some short-term pain. And in the word of famous economist Keynes, in the long run, we are all dead. So let's hope that this short term is really short term, and as a nation, the investments that we are making in this democracy, it starts paying dividend as early as possible. Thank you so much, Zafar Subhani Sahab, Asad Ali Shah Sahab, Naseem Beg Sahab, and Abdul Aleem Sahab for sharing your views, and thank you all for being a very good and patient audience. I conclude the session. Thank you.
Thank you very much, Fareed Sahab, for having this great discussion. Thank you very much to all the panelists for sharing us your insights. Next up, I would like to invite Mr. Ruhail Mohammed, who's the Vice President and CFO of Engro Corporation, to come and share his views and his experience of raising capital through the retail market, which has never been done before. We've done shares, but this is the first time probably a debt instrument has been raised at this level on the retail market. Ruhail Mohammed, Vice President and CFO of Engro, please. Thank you.
Assalamu alaikum. Looks like I have the unfortunate privilege of making the last presentation before lunch. But I'll try to be brief, and happy to take any questions after my presentation. Okay, my presentation is basically about the retail debt instrument which we launched in the fourth quarter of last year. And in many ways it was different from most of the TFCs you see. And I'll try to explain to you why we went about it and some of the learnings that came out. And obviously, we would like other corporates to also, use this as a benchmark and come out with more retail products as such. Okay, in any financial market, the corporate debt market is an integral part of the financial structure as such. However, in Pakistan, the corporate debt market hasn't really developed, even though the first TFC was done maybe, 20 years ago. If you see these numbers, they are minuscule as compared to other countries. So if you look at, for example, the amount of deposits, which is about 5 trillion rupees, government securities about 3.5, and NSS about 1.5. So you're looking at cumulative almost 10 trillion rupees of money which is being placed in deposits by corporates and individuals in various different modes of investment. Advances obviously comes from the deposits, and I agree that in the 10 trillion there will be some multiplier effect because the deposits get into advances which are again put back into the system. But even if I discount the multiplier effect, maybe even if it's 5-6 trillion rupees, the corporate debt market was only 300 billion rupees, and I think there is a need to develop that. So what was our objective? Our objective was to reduce reliance on bank borrowings, because while we had already raised the debt we required to do our expansion, and as a lot of you may know, we've invested almost like 120 billion in the last 4-5 years in various projects. But going forward, we were talking about just now the third project, etc., where we would need substantially large number of large funds to complete those projects. So we thought we would like to diversify and we'd like to test the market as such. It would also provide large-scale funding at competitive costs, because you've seen the size of the market, theoretically is 10 trillion rupees. And also, at the same time, develop the domestic debt market. This was a key desire by a lot of stakeholders, including the State Bank, the SCCP, etc., who wanted a domestic debt market also to flourish side by side with, say, bank borrowings and other government securities as such. Even the corporate debt market, which was almost 300 billion, is actually dominated by institutional investors, including banks, but a lot of it is coming from pension funds, provident fund, insurance, the non-banking market per se. And therefore, the retail participation in that corporate debt market was very minuscule, and if you just do the numbers, maybe it's less than 1%. So for retail investors, really there are only two possible sort of avenues as such. One is the national savings schemes, and they are various from saving account to DSC, so they have a whole spectrum in terms of the maturity profile. And then obviously there's bank deposits as such. So our objective was really to offer a portfolio of long and short dated instruments, which would help us in terms of providing another source at competitive rates. At the same time, sort of bypassing the banking channel, and therefore that spread which you see is actually then goes into the pocket of the retail investor versus the banks or other avenues. This has been very successfully demonstrated by in other countries. Let's take India, which we always compare with, like the bigger ones like Tata, Reliance. They already do these COIs, so to say, certificate investments, and they market it in a retail manner directly to the public and bypassing the banks per se. So where did we start with? We said we have to design a product and which the retail guys could understand. So we looked at national savings schemes, because we didn't want to go into a very short end, because banks, most of the bank deposits are short end. Either they are current accounts or saving account, or at best 1 year deposits. So we were actually trying to target the slightly medium end of the market. So we looked at the NSS breakdown, and we chose the SSC, special savings certificates, which is a sizable amount, is 1/3 of the NSS pie. At the same time, it had the highest growth rate, so 21% growth rate in SSCs over the previous year as such. So that's how we sort of targeted the market, and our sort of product features were designed around the SSCs as such. So they were 3-year maturity. The profit rate was 14.5%, so it was at that time almost 200 basis points higher than the equivalent SSC, although the gap has narrowed since then. It's now 13.2. You will get profit right from day one. And in fact, what we try to do in terms of just the product features is that while in SSC, if you want to encash early, you'll have to wait till either you won't get the profits between the two profit periods. So in between 6 months, if you go after 3 months, so you lose profit for 3 years. In our case, you could get it the day you ask for encashment. And obviously the tax benefits would be there as well. We had a rating done for our instrument, which was AA. And obviously there was at the corporate level, at the holding company level, while the individual companies were leveraged, the holding company was purely unleveraged. So at a market cap of, at that time, 68 billion, which has grown now to as such, those were the assets against which we were doing these borrowings. And obviously we had a couple of other advantages. Obviously we had floated other TFCs, which we had, impeccable track record. The other one was the Engro name itself was first very well known in the rural areas because of our fertilizer, but since we've gone into FMCG products like the foods business basically, so then obviously the Engro name became a more household name in the urban centers as well. The other thing which we try to target was the convenience factor, because the feedback we got was the SSCs are very cumbersome in terms of if you go there, take you 2-3 hours, manual ledgers, he'll take it out. So you waste a lot of time, either encashment, investment, and more importantly at the time of collecting your interest payments as such. So what we tried to do was that made the investment process extremely easy. You could just download the form from our website. You could just call us up. We'll send you the form. It was available we had 15 distributors, banks, and there were